In this video, we'll see one of the important branch of accounting, that is cost accounting. The contents of this video are background of cost accounting, various cost concepts, objectives of cost accounting. Let's start with the background of cost accounting. In the modern business world, the nature and functioning of business organizations have become very much complicated. Various internal and external parties, owners, creditors, employees, government agencies, tax authorities, investors, management of the business, etc. are interested in the functioning of the business. Accounting provides information to all these parties in order to satisfy their needs. A sound organization of accounting system is essential. The needs of the majority of the users of accounting information can be satisfied by financial accounting. Financial accounting is mainly concerned with preparation of income statements and position statements, which are profit and loss account and balance sheet. This information serves the basic need of all those who are not directly associated with management of business, but management of every business is interested to know much more than the usual information. To carry out the function of planning, decision making, control more efficiently, they require more additional information. Financial accounting system fails to some extent to provide all this required information to management, and hence a new system of accounting necessitates which fulfills all the needs of management. Cost accounting is developed for this purpose only. Let's understand the various cost concepts used in cost accounting. Cost concepts are cost, costing, cost accounting, and cost accountancy. Let's understand first concept, cost. According to Chartered Institute of Management Accountants, London, cost is the amount of expenditure incurred on or attributable to a specified thing or activity. Cost is the total of all expenses incurred, whether paid or outstanding, in the manufacturing and sale of product, or those incurred in giving a service. Costs are calculated from point of view of management, which expects cost to perform three functions, that is cost computation, cost control, and cost analysis. Let's understand second concept, costing. Costing is simply cost finding. It is the process, technique, and procedure of ascertaining the costs. It includes all the principles, rules, and regulations of calculating the cost. According to ICMA London, costing is the technique and process of ascertaining cost. The primary function of costing is the ascertainment of cost of products and services. In order to ascertain costs, certain well-established techniques and procedure are to be followed. Costing as a technique is a body of principles and rules which govern the procedure of ascertaining the costs. Next concept is cost accounting. Cost accounting may be regarded as a specialized branch of accounting which involves classification, accumulation, assignment, and control of costs. Weldon defines cost accounting as classifying, recording, and appropriate allocation of expenditure for determination of costs of products or services, and for the presentation of suitably arranged data for the purposes of control and guidance of management. Cost accounting is a quantitative method that collects, classifies, summarizes, and interprets information for product costing, operation planning, and control, and decision making. Next concept is cost accountancy. Cost accountancy is defined as the application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and the ascertainment of profitability. It includes the presentation of information derived therefrom for the purpose of managerial decision making. Thus, cost accountancy is the science, art, and practice of a cost accountant. Now we will see the objectives of cost accounting. The objectives of cost accounting includes ascertainment of cost, control of cost, reduction in cost, determination of selling price, matching cost with revenue, providing basis for operating policy, and preparation of financial statements. Let's see one by one. First objective is ascertainment of cost. The basic objective of cost accounting is to ascertain the cost of product, job, or service. Expenses related to a product are collected from diverse sources. In addition to direct expenses relating to product, joint expenses pertaining to several products are also taken into consideration while ascertaining the cost of product. Second objective of cost accounting is to control of costs so that the maximum and better production at minimum cost may be made possible. To achieve this objective, the technique of budgetary control and standard costing are adopted. Third objective of cost accounting is reduction in cost. Costs are not only to be controlled, but constant efforts are to be made for reducing them. Cost reduction implies real and permanent reduction in the unit cost of goods manufactured or service rendered without impacting their suitability for the use intended. Value analysis, time and motion study, standardization, simplification, etc. are the major techniques of cost reduction. Next objective is determination of selling price. Cost accounting provides cost information on the basis of which selling prices of products or services can be determined. In the event of depression or recession, cost accounting guides in deciding the extent to which the selling price may be reduced to meet special situation. Next objective of cost accounting is matching cost with revenue. The profit of any activity can be ascertained by matching cost with revenue of that activity. The purpose of this step is to determine profit or loss of any activity on an objective basis. Next objective is to providing basis for operating policy. Cost accounting is an essential tool for the management to formulate operating policies and to take business decisions like determination of cost volume, profit relationship, whether to buy or to make an article, etc. Next and last objective is preparation of financial statement. To prepare these statements, the value of stock, work in progress, finished goods, etc. are essential. In the absence of the cost accounting department, when we have to close the accounts, it rather takes too much time. But a good system of costing facilitates the preparation of the statements. As the figures are easily available, they can be prepared monthly or even weekly. In this video, we have seen background of cost accounting, means it is nothing but history of cost accounting. Next, cost concepts and objectives of cost accounting. I hope you understand all things. Thank you.